This is Andrew Stotz of Stotz Investment Research, looking at Singapore, which is cheap but least attractive in Asia. I look at countries by 4 blocks here. Let's get started with the upper left-hand corner. First thing we can see is GDP growth over the last 4 quarters is about 2.38%. That's pretty low for Asia, but not bad for Singapore. Now, the main drivers is exports. We can see that exports were up 7.7% and are 28% of GDP. The laggard was private consumption, which was actually down 2%, and that accounts for about 36% of GDP. What you can see here is that based upon the fact that it's a relatively small population, the distribution of contribution to GDP is more even. So normally private consumption, let's say the Philippines, is driving 70% of GDP, but in Singapore it's only driving about 36%. Government about 10%, investment about 26%, and net exports, the major component, 28%. Let's look at the country in more detail. 6 million people, per capita GDP, a massive $53,000 US. Market cap to GDP, partially because the GDP is low, but is 208. It's got slightly under $1 billion US in average daily turnover, and there's 712 listed companies. Unfortunately, the yellow line shows us that, the yellow line shows us that we've had outperformance, even though the market is going up, but the blue line shows relative underperformance. So it's a tough market. It's in Asia and in the world when you've got the stock price or the market moving up and it's still underperforming. Well, the country is relatively cheap on 2017 consensus estimates at PE relative, to Asia at about 15 to 13 times. But relatively slow earnings growth explains that cheap valuation. In fact, the last 2 years were negative, 2015, 2016. And knowing that analysts tend to be overly optimistic, you could be talking about 2 to 3% growth over the next few years based upon analyst forecasts. It's got the second highest dividend yield. Only Taiwan has a higher yield. This is about 3.5%. All right, let's look at the Stotz 4 elements where we rank the country relative to other countries in Asia. All right, so the blue bar shows the overall ranking, and it is the least attractive in Asia from an investment standpoint. Second lowest ROE in Asia in the past 12 months. Multiples are low and dividend yield is high, so valuation is expensive. And poor earnings and price momentum and risk, moderate volatility. Now, let's look at the sector performance. What we can see is, it's all about infotech right now. Everything else is subdued. Infotech was up 27%. The 3 largest sectors are the industrials up 27%, real estate 23%, and financials 20%. So that's the composition of the market. Now, the best sector was infotech with high P International up about 50%. The worst was healthcare with Raffles Medical Group down about 15%. So, get access to our research and articles by joining our free newsletter at becomeabetterinvestor.net/join, and I'll see you there.